Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is host Richard Benuli. Today is Thursday, May 16th. We have a very special focus today on Japan. And for this discussion today, we're joined by Sam Perry, Tobias Harris, and Ira Harris. Just for introductions, we have Sam joined Pictet Asset Management back in 1997. He's Senior Investment Manager in the Japanese equity team, graduate of University of Oxford. He's based in the UK, and he also holds a doctorate in experimental cognitive psychology, also from the University of Oxford, and he's a chartered financial analyst, CFA charter holder. Tobias is the founder and principal of Japan Foresight, LLC. He's observed Japan as a political risk analyst at Teneo Intelligence and as a researcher at universities and various think tanks. For over 2 decades, he's written about Japan's politics and the geopolitics of Asia for major world publications, including the New York Times, Washington Post, Wall Street Journal, Financial Times. And he also regularly comments about Japan on TV and radio broadcasts. He's the author of The Iconoclast, Shinzo Abe and the New Japan. And Ira is hedge fund manager, global leader in foreign currencies traders, trading commodities, bonds, and equities for over 40 years. He's also served as CME director from 1997 to 2003, and a stint also most recently. And we also have charts today graciously provided by Chief Investment Strategist Judd Hirschberg of White Wave Trading Strategies. So if there's any reference to current Japanese yen, Nikkei, we can make reference to some of those charts that he's provided. Welcome, gentlemen.
Thanks for having me.
Likewise.
And to me, what am I doing with this esteemed group? But we'll see where we're going to go here.
Great.
Richard, I give you a lot of credit because this, I think, Japan has been missing from the discussion for many years, but I think it's front and center. So we'll go here.
Great. Yeah, maybe we can begin, Sam, with your view on the global macro economy and the financial markets, and then specifically on Japan.
Yeah, thanks, Richard. Purely on a macro basis, then I have been a relatively lone voice here, reckoning that I didn't know if we were heading towards a soft landing, but I didn't know what a soft landing looked like, but I was pretty sure it looked exactly like this. I mean, the reason really quite simply is just looking at the US, you look at the liquid savings, just compare that to the PCE months of expenditure, and it's like at 3.5 months. There is still a lot of liquid cash sitting there and sitting around. Now, obviously, we've had a bifurcated economy now where you have the people who got but have not yet had to spend their stimmy checks. They are in great position. Some people, on the other hand, have had to spend their stimmy checks. We had the CEO of 7-Eleven Inc., so the part looking at 7-Eleven in the US. We were talking to him, and he was saying, yeah, we've had our customers go from having a $900 stimulus check to an $800 headwind because of just the cost of living. So we've got that clear distinction. However, in terms of the total appetite for lending, the total appetite for just moving money around the system, it just still looks very positive, even with the rate hikes that we've had. That said, of course, things look very good if we go back to 2000 and look at the Q1 there, where we got to 5.25% there. And at that point, still everything was looking very good until promptly it didn't. No signs of that yet, though. If you look at the very high frequency indicators like just the initial jobless claims, I know they're deeply problematic as a data series. There's so many issues you have to deal with on it, but nonetheless, they remain anchored around that 200,000 level, which is, especially given the rise in the population, unfeasibly low. This is an extraordinary situation. So yeah, I don't know if it's going to be a soft landing, and I don't know what a soft landing looks like, but it probably looks something like this. So that's kind of me for the macro, I guess. We're going to just start and finish with the US there. For Japan, kind of talk in my own book, but yeah, I'm an unalloyed bull. And I actually the reason is the same thing I've been saying for literally a decade now. Back in 2013, I was pounding the table and said, this is going to be the QQE as qualitative and quantitative easing that the previous governor of the Bank of Japan brought in, Kuroda. It was going to start inflation. And that was critical because there was so much cash sitting on corporate and retail balance sheets that deflation, all that did was give you a real return risk-free. So your hurdle for investing becomes incredibly high. There's no need for you to go out and spend anything. On the other hand, you get inflation coming in and all of a sudden you're not making a real return risk-free, you've got a wasting asset. So this was if that produced inflation, and I think we can now definitely say that we have got inflation bedding into the economy, then at that point, something's got to start triggering the flow of cash into investment, into M&A, returning to shareholders, getting spent in shops. You've got a pile of cash, net cash, sitting on corporate balance sheets equivalent to 2/3 of GDP. It's a lot, and it's spread across the economy. So yeah, I think we'll start an investment boom. I think that this is going to be huge for capex. I think this is going to be, absolutely transform Japan. Well, certainly transform the Japan that I've been looking at for 20 plus years.
Well, that's very interesting and exciting to hear. Tobias, can you provide your views from an economic and political environment perspective?
I'll just pick up on the Japan side of it. Obviously we got the first quarter GDP figures, which were not great. In the near term, I think the biggest question, I think, when we look at Japanese corporates and the pile of money they're sitting on, is over the medium to long term, do they view Japan as a place where it's worth investing? They're sitting on this cash, but where do they see the opportunities? And just from my own conversations, that I think they still see the growth opportunities are elsewhere. I think they see the United States as a place they continue to want to invest in, notwithstanding some hurdles that have emerged. And they see Southeast Asia and they see South Asia. And if there's going to be investment and capital expenditure by by the biggest Japanese companies, they may not be doing that at home. And so then the question becomes, is there a what sort of impact does that have domestically? Where is the growth going to be coming from domestically versus looking for these opportunities elsewhere in the region and globally? And that, I think that is really the biggest question in all of this about when will we see the investment boom from corporate Japan?
That's great, interesting. And your thoughts, Ira?
Well, Sam talked about the more global stuff to begin with, so I'm not going to delve into that anymore. But in following up on the Japanese scenario, I agree with Sam. I think that Japan has now all of a sudden become a good story. It may have started as a good story back in with Abe's 3 arrows, and I think we actually timed that to October of 2012, when the yen, which had been ridiculously overpriced at, I don't know, between 75 to 80 yen to the dollar, but they were in a deflationary environment. The rest of the world was really shaking and creaking. So we saw the yen be the recipient of the, as my friend Bernard Connolly would call it, the risk on, risk off trade. So there was a huge flow of yen back into Japan because Japan has more investment, as Tobias, sorry, as he talks about huge investments around the world, and they continue to have them. But, it's an interesting piece that Robin Harding wrote the other day, I thought, in the FT, picking up on this, and that everybody wants to detract from Japan because of its debt to GDP ratio, and I think we need to discuss that. Japan's debt to GDP ratio, while it's a metric of certainly macroeconomics, it's different in their regard, especially as Robin Harding pointed out. Their assets around the world, plus their their savings domestically are huge, and that makes a far different situation than others. And they have, again, ultra low interest rates. But I think Japan is, and I think a very good investment story going forward. And I hope that we'll get into a little bit. They're going to build up their defense industries. I know it'll be an issue, and I'm sure Tobias will speak to that from a domestic political point of view. But a cheap yen, and the yen is cheap on any relative basis that you want to look at. Why we can, argue, but it will put Japanese heavier industries in a very, very, very competitive position, and I think that needs to be discussed. But we've seen also Warren Buffett from 2020, 2021 get involved with a couple of the big five of the Japanese huge corporations. So I think that's probably a good takeoff point.
Yeah, Ira mentions the Japanese yen currency. Sam, we have actually also a chart here from Judd Hirschberg. And just wondering your thoughts on the Japanese yen currency trends and relationship with other currencies like the Chinese yuan.
Yeah, I'll just, I'll concentrate on dollar yen and then sort of work off from there. A really good and simple toy model for dollar yen is just to look at the real 2-year interest rate differential. And it's one I've used for a long time. That would, if you just, sort of follow that, then you would end up somewhere around 120, 130. It is a toy model, and if you look from, let's say, 2013 until 2019, everything breaks down in 2019. While it's a toy model, it actually works quite well as predictive tool. I mean, the R-squared is actually relatively high. So what does that tell us? Well, what it tells us is that, that helps explain what happened in 2012 when, as Ira said, we got down through 75. I think we actually hit 72 and change at the very worst point. And that was explicable by just the fact that because we had such deep ingrained deflation, then the real interest rates were very high. Whereas now, of course, real interest rates are negative. And we also know that the BOJ is going to be very, very cautious about changing that. I mean, this is, again, part of the reason why we think that real assets in Japan are a very good place to be. So what do we think is going to happen, and why do we think things broke down? There's no doubt that the relationship between the 2-year real interest rate differential and dollar yen did break down in 2019. That's not terribly surprising. We had massive amounts of intervention. We had the fact that everybody's velocity of transactions collapsed because of COVID lockdowns, et cetera, et cetera. However, there was another time when actually we did see a breakdown. And this is something I've not heard anybody really talk about, and that was in 2011 when we had the earthquake. 2011, we have the Great Tohoku earthquake, the nuclear power station shut down. That's 30% of the electricity generation of Japan. All of a sudden, you have an enormous lift in the fossil fuel imports. Now, we're very slowly getting the nukes back online. I think they're up to about sort of 7% or so. The really big TEPCO one is due to come online later in the year. That'll be a full extra percentage point. Meanwhile, we can actually have a look at the imports of fossil fuels. Some of these data series aren't terribly easy to come by, but you can use effectively LNG, which you can get on a monthly basis, and then that represents about a third of total fossil fuel imports. That fossil fuel import effectively explains pretty much the whole of the deterioration of the trade balance. So that happened in 2011. We can also see it happening now, and this is because of, since the invasion of Ukraine by Russia, and that helps explain a lot. Meanwhile, we've also that's a kind of it has a gearing principle, because obviously, the more imports you have, then the greater the cost because it's priced in dollars, and you're having to pay out the yen for that, and that just makes it worse and worse. On the other hand, if you start seeing the oil and LNG pricing and coal pricing come down, and you see the yen strengthen a bit, then the ratchet works in reverse. And that helps explain why you have these kind of sudden swings depending on trade balance. And at the moment, the trade balance is all about fossil fuels. So what do I think is going to produce the catalyst? It's going to take us from 150. Well, we've seen the BOJ intervene on behalf of the MOF a couple of times. They haven't confirmed it, but it's pretty obvious. So that's kind of helped put a bit of a ceiling. We sort of moved up from 155, touched 160. We're back down 155. It looks a bit more settled. We're moving out of the peak period of fossil fuel imports. We're starting to see China pick back up again. That's an important source of exports for Japan as well. So that'll help boost it as well. So I think that we could see this year, could we see 120? No, probably not. I mean, yes, currencies can be crazy, but probably not that crazy. Do I think we can see 140 to 130? Yes, I probably do. By the end of the year, maybe. Get a few more comments from the BOJ about how they're going to start normalizing policy again. Then yeah, we can start moving in that general direction. In the meantime, what about yuan? Yeah, that's an absolutely huge call, because obviously, China, Japan, US is the great trade triangle. The US part of the triangle is obviously broken because of the sanctions that are getting put onto China by the US. That generally works actually mildly in favor of Japan. There was one of the Dutch consultancies did quite an in-depth review of this a couple of years ago, actually under the Trump administration, where they demonstrated that Japan generally probably would be positively impacted by a severe trade war between the two countries, simply because it tends to export and compete with China to the US, and tends to export and compete with the US into China. So that, wouldn't necessarily be a bad thing. In the meantime, we can see that the Politburo, the Xi administration, is finally beginning to tackle the issues of real estate and beginning to tackle the issues of the economic issues within China as well. So that could help produce a bit of strength in China. And it has been interesting. The yuan has just been gently, sort of ticking up over the last few days against the dollar. I don't know whether this is in reaction to the yen. I mean, they have been making noises that they don't like the way that the yen has been deteriorating, and they wanted to do something. They wanted something to be done about it. And there's been a certain amount of bilateral communication. I think probably, yeah, we've seen that with Korea as well. We saw the Korean finance minister, the Japanese finance minister, and Yellen all stand together and talk about the currency. So there's a certain amount of coordinated movement happening as well. Do I think that the yen is likely to continue to appreciate? Yes. Will they probably hold the yuan to let it appreciate a bit against the yuan? Again, yes. Do I consider that to be a major problem for Japan? No, because I don't think we're going to move that fast on the currency.
Interesting. And your thoughts, Tobias, in terms of the industrial economic trends and the relationship with China?
Well, it's I think timely that at the end of the month there's going to be a Japan, China, South Korea summit for the first time in 4 years. So, I mean, clearly there is movement, within Northeast Asia, and trying to stabilize. I think macro stabilization will be on the agenda there, and I mean, in general, I think Japan would be careful to not call it a hedge, but I mean, clearly we saw, after Trump was elected in 2016, the efforts by Japanese and Chinese leaders to talk a little more about global economic governance and stabilize their bilateral relationship got a nice head of steam. And I suspect that as uncertainty about the United States begins to rise again, and Japan is certainly sensitive to that, that they will continue to look at China. That I think Japan is not 100% in lockstep with the United States as far as China is concerned. I mean, Sam really noted that in many ways, Japan is prepared to profit to the extent that it's able to. I mean, of course, they don't want to fall afoul of U.S. Export controls and sanctions themselves, and so there is a certain amount of sensitivity to that. But even if Japanese companies aren't dramatically expanding their presence in China, they're maintaining that presence and continue to view China as an important market. And so we're going to see, I mean, that hedging behavior is going to continue, that Japan is not prepared to decouple from China. It might, de-risk. It might try to avoid falling afoul, as I said, of U.S. Sanctions, but they're not they're not abandoning China by any means. I mean, there is, I think, a fundamental understanding that Japan does not have the luxury, perhaps, that the United States has of drawing distant from China, and that I think we should expect that's going to be a source of friction going forward, regardless of who wins in the U.S. presidential election in November. That a second Biden administration, that we've already seen that there's plenty of areas where Japan is uneasy with the direction that the Biden administration has taken towards China. That will continue to be the case if Biden wins, and I think very likely under a second Trump administration too, that there's going to be trying to figure out how to get on the same page with China is going to continue, even if on in security and talking about defense, that they're going to be sending the same signals, but there's just not the same willingness to decouple, and that will continue to be an issue between the U.S. and Japan.
Meet the Cedar Owl, a new economics and finance publication with a focus on environmentalism. We combine the Austrian School of Economics and market environmentalism principles for investing in a sustainable future. Follow the link in the description to get to know the Cedar Owl better, understand our values, our mission, exactly where we're coming from, and the type of content that we release on a cyclical basis every Thursday. Join us in targeting outperforming portfolio returns while making a positive impact on society and the environment through technology. Subscribe now for weekly insights, investment articles, and exclusive content.
And your thoughts, Ira, could you also relate our prior discussions with Louis Vincent gave on the relationship, emerging relationship between Japan and China relative to Europe on industrial machinery and those type of areas? Yeah.
Richard, that's exactly where I was going to go, because I think we opened that up about a year and a half ago on this site when we did a podcast with Louis Gavay, and Louis raised that issue that the U.S. and others were willing, well, even China was willing to tolerate a weaker yen. And Louis raised the issue that out of China, that they were maybe trying to move out some of the European investors and be more comfortable in Japan and other certainly Southeast Asian and Asian countries, gaining some of that market share through weaker currencies. And it's difficult to prove that, but it's an interesting posit. And I think as Toby has written, sorry, I will.
It's fine. It's fine.
Okay. So as he has written over the last many times, there was a hollowing out of Japan, of course, just like the United States experienced with the Rust Belt. And during the times of the strong yen, there were industries, of course, who went to Vietnam, Malaysia, as well as to the developed world. But some of that is coming home. Certainly not enough yet, but I think corporate Japan is very well positioned. And again, if they start bringing money home, it's to, large corporate Japan will really benefit from, of course, 150 yen to the dollar. And I like what Sam has to talk about, because I think there is a lot going on there. And more importantly, as you put up the chart from, what are we calling him? White Wave. I know him as Judd, of course, but White Wave, that yen yuan chart to me is so significant. If you can put it up again, because it is held in this area. And there was a piece today in from the editorial board of the FT talking about intervention, and they missed a point. I think everybody's talking about this intervention points. They're talking 2022. I think the critical date is June 17th, 1998, when Bill Clinton was on his way to Beijing, and the United States Treasury moved to intervene to support the yen. Now, that was China complaining that the yen was way too weak and was causing them some consternation. The U.S. was certainly playing to China at that time, as Bill Clinton brought with him, of course, a whole delegation of U.S. CEOs and large corporations on that trip. But the U.S. Treasury, they were the ones who initiated the intervention. Now, this gets very interesting. And if you go back and look to see where the yuan, where the yen yuan was, I think it was at 17 and a half yuan, 18, and they thought it was weak. You know, now we're up to 20, 21 and a half yen to a yuan. So it is really weak. But I think the Chinese keep their eye on that. They don't want that to be too weak, because as you can see, look at the automotive sector around the world. The two largest auto exporters are China and Japan. And you know, Japan has done very well, especially with Toyota, as Chris Whalen has written about quite a bit, as he has been bullish on Toyota. But Toyota has done very well staying the course with the hybrid vehicle, and with the weak yen, that's really a pain for Europe. Because to me, you know, and Tobias and I have talked about this over the years quite a bit. You know, it's Japan and Germany that compete directly, and I would add Switzerland too, in pharmaceuticals and optics and high-level machinery. And this weak yen, I think, is really causing some problems for some of those in Europe, which is why I'm amazed that they sit so quietly. Because as important as the dollar yen is, I'm looking up at the euro yen up at 168, 169, and I'm not going to paraphrase. I'm quoting Jean-Claude Trichet. That's preposterous. So I think that there's something that has to become done to this, and it plays and wreaks havoc in other ways. But I think that chart that you put up on the end is very, very important.
And what are your thoughts, Sam, on that? Like for the potential for a Chinese yuan devaluation, given a weak yen in the competitive currencies in the region there?
It's certainly possible. I think they're more likely to wait for the yen to try and strengthen a bit. I mean, the BOJ has made it clear, or the Ministry of Finance has made it clear they will intervene. And I think that it's very likely that we are at the pretty close anyway to the point of maximum pain if you are if you are long the yen. Certainly, I mean, we've just looking at the questions that we've been getting from our client base. Then everyone is concerned about, should they be holding it in yen? Should they be holding a position hedged? Our view has actually been, and has been since the beginning of the year, is that we've been saying, no, just have it open, don't have it hedged. If the yen's going anywhere, it's going to strengthen. And I think that unless we saw a particular reason for the Chinese to be getting very anxious about the yen, I don't think there's much of an issue. I'd actually just like to come back on that discussion about that Tobias raised about China and Japan. I think the one thing that that was a lovely description, that they're prepared to not prepared to decouple, but are prepared to de-risk. I think that's it entirely. When we've seen this with Hitachi, we've seen this with actually quite a few companies now. Hitachi is certainly the biggest, and that is they are effectively ring fencing Chinese production for China. So they're basically reshuffling their assets, so that the factories that are based in China will now service the Chinese market, and then the factories elsewhere in the world will service elsewhere in the world. At the same time, they're certainly not pulling out of China. I mean, there has been a steady progression of movement of factories away from China into places like Vietnam and Myanmar and so forth, or even Thailand and India, just because of how expensive Chinese labor has been getting. I mean, you have to go a long way inland before you have labor, a good, educated but cheap workforce, the way that you used to out on the East Coast. That just doesn't exist anymore. But yeah, they're certainly in China for the long haul. And I think that is, it is a very important relationship. We do have spats. We have, when was it 2012? We had the Diaoyu Island, Senkaku Island issue. These sort of things come up every so often. But for the moment, I think that, they are very much trying to work together on a large number of issues. And I don't think they're likely to start rocking the boat. Now, here we come on to a political question, and Tobias is probably the expert on this, and I'm just a dilettante. But if we had one of the real hawks come in, Kishida's going to go. His lifespan is incredibly limited at this point. But if we have one of the real Chinese hawks come in into leadership of the LDP, might we then have an issue? Well, possibly. But for the moment, I think we're okay. There are also some fairly obvious Asia-centric candidates who are quite likely to get the leadership position. So yeah, for the moment, I think we're probably going to keep it reasonably stable.
Go ahead.
Yeah. Well, I mean, so just on the, I mean, I if we're going to wade into domestic politics a little bit, I'm happy to, both on the currency side and then on the latter question of who might end up leading and what we would expect on Asia policy and China. I mean, I think another reason to expect to see some yen strengthening is that I think Kishida's trying to save himself, and I think it's very clear where the political costs lie as far as the currency, and clearly, households are feeling higher food prices and higher energy prices, and just if Kishida has any chance of survival, there's got to be a sense that household incomes are rising, real household incomes are rising. And so I mean, clearly, I don't think it's an accident that Kishida returns from his Golden Week travels last week and immediately goes into a meeting with Governor Ueda, and Governor Ueda comes out of that meeting talking about how concerned he is about the strength of the yen or the weakness of the yen, and that he needs to be, that they might move a little quicker on interest rates than he signaled at their meeting in April. I don't think that's an accident. I think the messaging that we've heard from Finance Minister Suzuki, from the Prime Minister, about the BOJ and the government being on the same page, that message is not for the government having to adapt to the BOJ. That's a message to the BOJ to get on the government's page. And so clearly the signaling has changed. Whether, I don't know when exactly we're going to see, the next interest rate hike from the BOJ, but clearly the message has been delivered to the BOJ and is continuing to be delivered that the levels of, 160 was not tolerable, and they're prepared to move again. And so, Sam, I mean, I think you're exactly right that, there's every reason to think that we're going to see more strengthening, in the next 3 to 6 months. Not least because I think Kishida has no chance if the story continues to be how squeezed households are. And so every reason to try to move in that direction. On this leadership question, the other thing, I mean, I just suggested that Kishida could really be in trouble if the yen doesn't strengthen, but it's easy. I mean, not too long ago, it seemed like he had zero chance. And every day that there's not someone mobilizing to replace him, the likelihood that Kishida finds a way to survive goes up. That the LDP does not have is very fragmented, does not have an obvious person to replace him. And I think, to your point, the likeliest successor that if he is pushed out ahead of, or either during or before the leadership election the LDP has in September, the likeliest replacement will be someone from sort of the broad mainstream of the party. I mean, I don't think we're going to see someone from the right wing emerge that would push Japan maybe in a more hawkish direction and lead to a real change of direction on China. So in that sense, I think there's going to be a pretty steady course as far as Japan's foreign policy is concerned.
I was having this discussion with some colleagues in Tokyo. And I think that our discussion basically came down to it was either going to be Kono or Takaichi. And that, of course, gives you...
I don't think either of them has a chance.
But basically, I mean, I do agree with you. I think that, that there is a real problem for them because you can frame it in one of two ways. You've either got the GOP problem, namely that they're so fragmented, having defactionalized, nobody's sure exactly how much support everybody's got. It's all a bit unclear. Nobody wants to take the first move. Or the other side, which is the Tory party problem, which is in the UK, which is that whoever takes it is just looking down the barrel of a gun, and they really don't want to go down in history as one of the very, very few leaders who led the LDP into opposition, which is entirely possible with these polling. I mean, yes, we have an incredible. It's not like the previous time when the old Democrat Party got into power, because everything is much more broken up in terms of the opposition. And you've got, Isshin Okai coming in on the right-hand side as well, which is disrupting things even further. But there's a definite possibility you could end up having to have a sort of, a grand coalition, a sort of a 2012 situation where nothing's, sorry, not 2012, 98 situation where nothing's terribly clear. You have initially an opposition grand coalition, then the LDP managed to muddle themselves back in, and so on and so forth. It's a mess. It's a huge mess. But I think that there are. Who would you go for then? I mean, you're going to go for Motegi?
So I mean, I
suspect.
Well, so Kono's not going to happen. That because he's not acceptable to the right wing. The right wing would. We saw it in 2021 that and anybody but Kono candidate, and Kishida wound up being that guy. So I mean, they're not going to and remember, it's not a popularity contest. So if the public was voting, Kono might have a better shot, but it's not. I don't think they're desperate enough to go for Kono. Takaichi, obviously, she has the strong base on the right wing. I don't think that's enough to win an election. And you have a lot of people who the only thing they care about is who's going to be the best person to go into a general election under. And I don't think I think there's going to be a lot of people who are uneasy about having Takaichi as the face of the party. So maybe she makes it to a second round, just by virtue of having kind of the united right wing behind her. I don't think she has the ability to reach beyond that base. So so you're kind of there on the flanks. I mean, if Kishida doesn't run, it's entirely possible that they just go for someone like Foreign Minister Kamikawa, who is basically unknown, who has not been tested in any kind of serious way. But it is entirely consistent with the LDP as we know them to say, well, let's throw something shiny in front of the public. Oh, the first female prime minister? Great, let's do that. I think she's basically interchangeable with Kishida. I mean, I think she, she was in Abe's government. When she was appointed as foreign minister, the kind of noise from the right-wing media was that she's, broadly acceptable and Abe liked her. So, sort of has the right wing's tolerance, if not outright blessing. Aso, who is the only kingmaker really left, has basically given his blessing. So if Kishida steps out, I think they slot her in. They say, look how progressive we are. We have a female leader for the first time. And they just kind of keep on trucking with her. Basically, her positions, I think, are roughly the same as Kishida's. Now, I don't know if people are going to be impressed by that because she's so, still basically an unknown and not tested and not really clear what capacity she has for controlling a party that right now is really divided and fractured. But it seemed I could see her working as sort of a short-term fix that sort of gets them through the current crisis, and then they can deal with who comes next after that.
I think that if the LDP manages to secure the Shizuoka gubernatorial election, which is obviously her neck of the woods, right, she could say, "Look, that was me. I managed to bring us home."
Yeah, that gubernatorial election is turning into another by-election. I guess there's still speculation that if it goes really well, that Kishida will maybe use that as a green light to call a snap election. I still think we're probably waiting until later in the year when the leadership situation's a little more clear. But no, I mean that I think there are certainly a ramification of that gubernatorial election.
A lot of dynamics in play, and we mentioned Bank of Japan earlier. Ira, what are your thoughts on the Bank of Japan, like monetary policy trends, what they may do?
Well, this has been a great discussion because we don't hear enough about the domestic impact, on the yen especially. So if we go to the BOJ, and again, as Sam talks about, and Toby certainly has taught me over years, the Ministry of Finance, of course, will play a big role in this. And if Kishida really feels, as Toby brings out, that about the yen, the weaker yen, not having, it may be good for certain businesses and may be good for tourism, but it's not good for other things. But I would, the United States asks a lot of the Japanese. They ask a lot of everybody especially now that they're trying to build wider coalition in Asia to counter some of the actions of China. But it was a year ago, in fact, almost exactly a year ago, that Christine Lagarde warned about a rise in Japanese yields upsetting the global bond markets. So it would behoove the G7, whatever the G7 means today, to act with the BOJ to move the yen if they were really concerned about it. I think there's global concerns. I think there's some concerns in the global south because I think they would like to see a weaker dollar overall. And I think one of the things is that the yen with the carry trade keeps the dollar, I think, stronger than would otherwise be. But I think it would behoove, again, that word, Janet Yellen and company, who are worried about the U.S. bond market. I mean, we've heard from Phil Swagel, and now in today's FT, there's a big article with Ray Dalio about the U.S. debt situation. So they certainly don't want Japan having to raise rates more aggressively to counter a weak yen. So it behooves the G7 to push the yen down to the levels. I'm in total agreement with Sam. I don't pick those targets, but if dollar yen went to 130, 125, I think it would be better for the world in general. Again, we can debate those issues, but the BOJ would be very well to coordinate it. And again, I go back to June 17th. That's not an insignificant date, especially if you're a currency trader. Caused a lot of pain and suffering. And because the carry trade is the prevalent fundamental driving the weak yen, it's not current account. And even with the trade, as Sam talks about, with the trade being moderately in deficit, but with Japan's saving rate, and I'm glad we talked about the effects of course, Fukushima in 2011. They need to get those, of course, those reactors turned on, but that's, again, we'll come back to Tobias for the domestic part of that. But they need to do this in a much more coordinated way to really cause pain and suffering. When markets are acting correctly, when markets act as signaling, they cause as much pain and suffering to investors as possible. That's the market's job. It's not to sit we're not supposed to get into Minsky moments where you get complacent. Complacency breeds complacency, and it's time to upset that complacency. So do they have the political will domestically? I think Toby really raises some good points. You ask about the BOJ. Ueda at times, I don't know where he's going, but I'm glad that Toby talked about the meeting between Kishida and Ueda. Let's see what gets done here. But I think it has to be done on a much more globally coordinated, because it would be, you don't want to run a situation where Japan has to start raising rates. I think Christine Lagarde had it right. And if Janet Yellen would wake up a little bit, she would say, hey, we don't want, they've warned, again, Phil Swagel, not a person prone to hyperbole, by the way, if you know who is now the head of the Congressional Budget Office. When he warns of a possible Liz Truss moment, you better get out ahead of that and prevent it. And what could cause that, of course, would be a dynamic selling of U.S. bonds in an effort to raise dollars to have to intervene in the market. So, I mean, that's where I would sit if I was the BOJ.
Any thoughts, Sam, on that, the Bank of Japan, and also the effects that it could have on the Japanese yen currency carry trade?
Yeah, well, I mean, we know from the past that the carry trade will continue until, as Ira says, enough pain is caused. We've seen that many times over the years. I think it's an interesting position at the moment that clearly there has been a degree of upset of the carry trade. There are strong indications that rather than funding out of the yen, where people are seeing that there is going to be normalization, actually people are now looking more at the Swiss franc. They're looking at other currencies instead of just doing the yen. So I think that is, that is a question mark which I don't know enough about in terms of the fine mechanics of that sort of stuff to know for sure. But certainly this seems to be what I'm being told by the people here who do work on currency and on the fixed income markets. In terms of where they want the yen to go to, I think if it went direct to 120, they would absolutely have conniptions. On the simple reason that would be one hell of a surge in a very short order. Looking at the corporate results that have been coming through, pretty much everybody is penciling in a forecast dollar yen rate for 130 to 140, which would be fine. They can easily maintain that. I mean, if you look at the Cabinet Office, they do a survey of big manufacturing companies, say what's your dollar yen break even? And I think at the moment it's like kind of 117. So 130 would be easily handleable by pretty much everybody. It wouldn't cause any problems really. However, we also know that the impact of verbal interventions that we saw with Shirakawa in times past, totally useless. There's literally no point in doing it. On the other hand, if you put your money up and there is some effect, but not for long, the only thing that ever really works is joint intervention by the Fed, by the ECB, Bank of England, the big central banks in the bodge. That's the only thing that ever really works in terms of the currency market. So for the moment, yes, I absolutely agree. I think there's a general building consensus. Not just in Japan, but the yen is too weak. I think certainly it's also a hot political issue for Kishida. Inflation is the #1 issue he's facing at the moment. Yeah, I think that we're unlikely to see a radical sea change unless we get some form of joint intervention. Maybe Yellen comes up and says we stand full square, along with Powell, and says we stand full square behind Kishida Ueda, and we are prepared to take action in disorderly markets or something, and the Bodge acts on behalf of the MOF to give the currency a boot as well. Maybe that's what does it.
And any thoughts, Tobias, on the Bank of Japan monetary policy trends and also government fiscal policy trends?
Yeah, we can jump over to fiscal policy, but we've touched on the energy question a little bit, and I've kind of made a note to come back to it because I think the Ministry of Economy, Trade and Industry started this week with its basic energy plan, which does its kind of long-term outlook for the energy mix and the electricity generation portfolio, and so we're going to get more of a sense this year of how the government wants to move. I think the nuclear question is a massive one. There has been a slight shift, at least there had been a slight shift in public opinion kind of post-Ukraine war towards tolerating restarts, but it's still a really difficult process. You have to get buy-ins from the local community and the local governments, and so it's not something that is happening quickly. And the question is the Kishida government or whoever follows Kishida prepared to really throw weight behind making this happen? I mean, this is, supposedly METI is going to call for, not just restarts and not just extending the life of existing reactor fleets, but, really starting to build new reactors and making nuclear, an important part of the energy mix, really out, 15, 20 years into the future, which is a big change of tone from the last time they did one of the basic energy plans. And so, that obviously has a real impact on what Japan is importing. And, if they're serious about it, and if they're actually willing to spend the political capital to make it happen, I mean, that's something to watch. It's just they're stuck between ambitions in the future and the realities in the near term, and how to bridge the two. And that just people have not forgotten 2011, and if you try to rush it and if you try to force it through, you're going to get a backlash that's going to make it just harder to get what you want. And so there's no shortcut to the kind of dependence on nuclear energy that they prefer, or at least that METI would prefer. I think it is worth talking on the fiscal side, because I think any discussion of interest rate hikes in Japan, I mean, immediately, I think as soon as the BOJ changed its tune in March, already, you know, the LDP and from the Ministry of Finance, the kind of messaging and tone that you were getting on, you know, now is the time for fiscal consolidation. You know, we need a plan for fiscal sustainability. All of that, I think, has changed. And, you know, within the LDP, fiscal hawks, I think, have been on the defensive for years. I think they're feeling a little more energetic. I think the Ministry of Finance is feeling a little more energetic about, you know, and feeling that it has the upper hand in terms of pushing ahead, to trying to reduce the spending that we've seen in recent years and the reliance on debt spending that we've seen in recent years. I think the balance of power within the LDP is still probably in favor of the fiscal doves. I think that there's too much they want to spend on, and maybe that means that there's you know, more tolerance for lower rates for longer within the LDP. Than perhaps we think, because, you know, that no one wants to move too quickly. I think, you know, there's been plenty of estimates put out as to what interest rate payments might end up being in the budget, you know, over the next 5 to 10 years, you know, if there's you know, interest rates rise you know, a full percentage point or more. So you know, I think you do have kind of cross-cutting pressures as far as fiscal policy is concerned, that I think there are people who are concerned about the overall picture. Although, as Ira said, that we have to look at the net debt, not the gross debt. I think that is a different picture. But it's a live issue now in a way that it hasn't been, I think, for several years.
Interesting. Go ahead, Ira.
So, yeah, and I think that's so sorry, but that is such an important issue. And the cost of finance, of course, yes, does become an issue. But I wanted to bring up a couple other points. You know, the BOJ has done a far better job, because their mandate on quantitative easing was qualitative and quantitative. So as Sam brought in the Swiss National Bank, to me, is a far better paradigm for them to follow, because the Japanese did buy a lot. The BOJ did buy not just bonds, but they bought REITs and all types of equities that they're sitting on huge gains. Now, are they going to be able to harvest those gains without absolutely crushing the Nikkei, so to speak? You know, just using that, not just the TOPEX. So I think that's an issue, but there's a huge amount of money sitting there, just like there is at the Swiss National Bank. So that is something that gives them a little bit more leverage than, of course, the Fed or the ECB or the Bank of England, because they just bought bonds. But the Japanese have been far more creative. Now, again, it will become an issue of how do you harvest those. So I think that needs to be important. And secondly, when it comes to fiscal, you know, the fiscal deficit, and I'm talking about, you know, the measure that everybody uses, the metric of debt to GDP, really has not done anything in years. It's been sitting at between 240 and 250 on that kind of metric for quite a long time, which is far different than where we're at in the United States, which is growing by leaps and bounds and puts the U.S. Treasury in a far different position because they're bringing all this debt to market. So, you know, again, what are those valuations that people are sitting on? Right now, I have this morning's recent numbers. So we're at the JGBs are around 93 basis points. Are there some losses on it? Yes, certainly, of course. How will it affect the big banks? You know, I'm still one of the things I've talked about for years is the investability of Tokyo Mitsubishi. I think it's one of the better investments. As we're talking right now, it's down 4% today, but I still think that it has assets, and it's a positive asset for Japan, because as Sam has talked about, how is Japan going to do this financially, and what is going to be their financial role in Asia? You know, we've seen UBS and other banks who have had a huge footprint in wealth management across Asia. Well, the fact that, you know, Tokyo Mitsubishi owns 23% of Morgan Stanley, which has really concentrated on its wealth management business, it's time for Tokyo Mitsubishi and the Japanese to become much more aggressive in the wealth management business in Asia. So it's one of those things I'm looking forward to.
Just a final question, Sam, on your thoughts for the Japanese equity markets, if you're bullish or bearish on certain sectors.
Yeah, certainly bullish overall. I think that a lot of the sort of the fine chemicals, functional chemicals, and tech components are looking very interesting here. I mean, we've seen, obviously everyone's been looking at the US, everyone's been looking at Mag 7 and going away, and yet you look at someone like Sumco. It's a really simple company. It just makes silicon wafers. It's all it does, and it's been getting, it's got a fair old kicking over the past while, because we have actually been, despite all the excitement over AI, we've been in a pretty long and extended trough of the silicon cycle. That's clearly now coming. We're clearly coming out of that. Whether you talk to, the guys like, involved in hard disk drives like Nidec for the motors, or Hoya for the substrates, or TDK for the media. Whether you talk to the silicon chip guys, they're all saying, yeah, we're finally actually starting to see the inventory is starting to come down. The client base, we are starting to see things pick up. We've got people like TSMC wanting to build a new factory in Kumamoto. So yeah, that's, I think, an area which is looking terrific. Other areas are, on the more sort of kind of fashion, retail, people benefiting from spending. We're seeing the inbound tourists come back in, and we haven't even. Certainly at the numbers at the moment, it looks like tourists are greater than they were in 2019. So we've completely recovered the COVID slump in tourism, and we still haven't got the Chinese back in. So that's a significant positive as well. So those are two areas I think do look good. I think the whole market looks good. Am I worried about the bodge exiting and causing a mess of things? No. I mean, they have basically stated outright that they're going to follow the Hong Kong Monetary Authority. I mean, I think they were being a bit cute about it. They said that done a study on how the Hong Kong Monetary Authority had resolved their holdings of the Hang Seng and Hang Seng equities after the Asian crisis. And the bodge, I think, is fairly clearly going to follow in those footsteps. So yeah, it'll be a mega ETF. It'll be a mega ETF that has a nice little discount for retail residents. That's definitely, I think, the direction they're going in. And we can see from what happened in Hong Kong that you can actually do a really massive issuance on that, and it just disappears, poof, and you don't even notice it. And I think the bodge can also look back at its own experience in 2006 of exiting QE before. And again, you can do that with comparatively little damage to the overall market. So yeah, for me, that isn't actually a concern.
Well, that's great analysis and ideas. Your thoughts, Ira, on the investment ideas?
Well, as I talk there, I think there was very investable, and I was, with Toby, I just, as far as the Japanese defense industries, will they be allowed to ramp up to the level that they could, especially in the world, because the United States is, of course, pushing them and others that Japan spends more on defense, and how will it play out. I mean, the Japan as an engineering entity and high quality products, they're as good as it comes. It's the Germans, and it has been the Germans and the Japanese, and the Chinese are trying to break into that realm. I mean, the Koreans have certainly been there, but this, you think about high quality engineered products, it's the Japanese and the Germans as much as anybody else. So I think there's a lot of latitude. And I think that what Sam talks about is absolutely right, because if we go back to Abe's 3 arrows, we got the monetary, they got that right. They got the fiscal end right, but they never got the governance issue in Japan as far as corporate governance. I think it's starting to happen now. I think Toby has actually written about it over the last year, that there are some changes and thaws, and that makes Japan much more investable. But they have to be careful here, because if they leave monetary policy too loose with a weak yen, they can just wind up maybe are we up here at 40,000 on the Nikkei? Is it just the reinflating of the bubble? I don't think so. But if it's only based on monetary policy of, again, weak yen is very much a part of that monetary policy, and zero interest rates, then they're going to be in for a redo, and that's not a good redo. So, that's where I think they need to be very careful here.
Well, yeah, awesome discussion, very insightful. And how can our listeners learn more about your work? Like if you have a website or research reports, Sam?
Well, I push out all sorts of stuff, which goes to our sales guys, and some of it gets turned into very pretty reports done by our communication team. So yeah, look on the Pictet websites. That's where it'll be.
Great. And Tobias?
My company is Japan Foresight. You can go to japanforesight.com. There's a link for a contact form if you want to sign up for a trial to receive my research. I also write for more of the in the weeds Japanese domestic politics stuff at a Substack, Observing Japan. So you can go to either Japan Foresight or Observing Japan, and my writing is there.
Great. And Ira?
I'm just most of the time you can find me here on Financial Repression Authority. Every once in a while I'll put out a blog. I used to blog regularly with notes from underground, but I'm really doing a lot more electronic dispersion. But yeah, I try to get out there and discuss. This is like a great discussion to me of deep ideas. Japan is a very important topic, and I think we really covered a lot of ground here. So I'm really proud to be part of this, and I'm glad. I'm glad I was able to sit in this group. I think we covered really a lot of important ground for the world.
Great. Thank you so much, Sam, Tobias, and Ira. Thank you.
Thanks, Richard.
Thank you.
Thanks, guys.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.